Hello, it's Cheds, and this is part of the Trading Encyclopedia Daily Education series on my YouTube, Cheds Trading. Find me on Twitter at Big Cheds and Bitcoin Live, where I'm a founding analyst. For today's lesson, we're going to take a look at a selection from my latest book, The Trading Journal, Trading Wisdom Part 2. It's how to fill out a trading journal, why you need one, emotional management. And part of it also are sample trading journal entries. We're going to look at a sample trade here based on a technique I described earlier in the book, the throwback or the bullish retest. And this is for Alpha, is the name of the play. And Alpha, it's in a strong uptrend as defined by the price above a rising daily MA200. Now, in this trend, the individual is looking to take advantage of a movement against the trend. So the price broke out of this large base, it consolidated, and now it's revisiting a well-defined price zone, a key feature of any prudent trading setup. The stop loss is when the trading idea fails, and that will be if the price is unable to hold this zone on the throwback. The idea is that the bulls are likely to respond because it's a well-defined level, but if it fails, the idea will fail, and the confirmation method here is a daily candle close below 103. Profit plan here is generally to take some price as it approaches the next major overhead level, with the idea to trim a little bit of profit, but to not sell it all, just to really see how things happen. So a really solid general idea. Mindfulness is important to ask yourself how you're thinking, how you're feeling. And I'm feeling a little bit excited here, but not too excited. One of my favorite charts, it says, and I've been studying the chart, so they're confident despite being a little bit excited. So that's okay. Now, end result, what happened? The trade worked out. There was very minimal chop, which is nice. Oftentimes on a throwback, it will chop around and through a breakout level and make it very difficult to manage. In this case, there was minimal chop, and the individual was able to sell half the position at that level above, that $125 level, and they are now holding the remaining position. Now, also, since there's some profit taken, there's no stress. They've already taken some profit. They're trading with the broader trend. They're riding the trend. They took advantage of the move against the trend, that throwback, and they will monitor and potentially trim even more as the price goes higher and approaches further overhead levels. Lessons learned, always important. What did I learn? Well, given the strength of the trend and how little weakness was shown when it was testing that major level, this person wonders, maybe I took too much profit. Maybe they could have held on more. And you always think, you know what, I could have done better. I could have maybe taken more profit. But that's hindsight bias. It's hard to know ahead of time. And this individual realizes that. They say, you know what, I will never play I will never play anything perfectly. So any profit is good profit, and now my position is mostly stress-free. This is an example of how you would have played a throwback or a bullish retest. Thesis: this is part of the Trading Journal, my latest book, Trading Wisdom Part 2. And this is part of the Trading Encyclopedia Daily Education series on my YouTube at Cheds Trading. Find me on Twitter at Big Cheds and Bitcoin Live, where I'm a founding analyst. Thank you, folks, and I'll talk to you soon. Big Cheds out.